What's up, everybody? It's Jimmy from Trading Decoded. It is April 15th. Happy tax day. Not so much. Screw you, IRS. It's 4:24 in the afternoon, and I'm a little delayed because I had to take a dump, much like the market did today. With that said, was an epic day for anybody who decided to play puts, especially for those who waited for the right opportunities to play. You had both aggressive entries and conservative entries, and oddly enough, the conservative ones paid you the best today. But don't ask me because I don't know anything, and I certainly didn't take any trades today except for the two that I may or may not have. I was two and done. Now, the third trade that we found to take, or hypothetically found to take, ended up being a banger of a trade, and then most of the community, at least in my room, was done by that time. So there's not a whole lot more to talk about other than the same structural price action things that we look for day in, day out to justify any trades that we take, which we'll go over a couple of those. But more importantly was a day about spotting what trades not to take, calls, unless we crossed over certain lines. And we're going to talk about that as well. So without further ado, let's go ahead and launch a chart and see what the hell was going on. Pre-market was pretty tame until we had our 8:30 reports, and she started to move to the upside. Now, I had no bias today whatsoever. The market was very green in pre-market. In fact, we opened up extremely green. The majority of the market opened green in relation to where we closed on Friday. And I had a very specific call line that I would be interested in taking. Well, we never crossed the call line. We came close to it. We rejected it pretty good, both in pre-market and on the opening candle. And ADD at the time was running up like crazy. Okay, something not to ignore. Let's go ahead and enlarge this. So ADD was running up pretty good. Okay, and around 9:36, she started to come down. However, just like I tell everybody in my community, I'll never play against the Qs. Let me get rid of these lines. Okay. In fact, I tend to side with the Qs. So what I wanted to see on the Qs for an aggressive entry was them to break their pre-market low line, because I believed from there it was going to run to at least this last support that it found in pre-market the last time it got below that blue line. Now, for Qs, that's from line to line, that's a little over a 70-cent move. Normally, that would be a huge payday. However, ADD was moving up at the same time, which is going to basically diminish a lot of the size of the move that Qs would give. Okay, so I'm not worried about ADD. But if it's moving in the same direction at the same time as the Qs, you're going to get every bit of that 70-cent drop on SPY most of the time, and sometimes even more. But because Qs were tanking, I was okay with puts. I just wanted to see them get through 441.05, which would have given me a reason to take those puts, looking for the next support level down, which we got to. And in SPY, that didn't end up being a huge trade. Okay, so we ended up getting out here, not because SPY had hit a level of support, but which it did, but because Qs hit their support. That trade right there, if you were to have taken it, hypothetically, of course, was about a 17.5% winner. For a lot of folks, that was good enough. Okay, then we moved to the upside. Still waiting for our call line to get closed above. Never happened, but when we got back up to the top, we are at the resistance on Qs or on SPY, and guess what we were also doing? Rejecting Qs. But here is an important difference now. ADD had already started selling off. Okay, so now you've got ADD moving down, giving us confirmation that the market decided it wanted to take, at the moment, a little bit of a breather. Didn't mean the market was going to fall through the floor, but nonetheless, it started to rotate to the downside. Okay, so we have the market doing that. We want Qs to be at resistance, and we'd like to see Qs make it down to that same level of support that they were at before. Okay, so we get in, hypothetically, and we get down to somewhere around here. which is 947, which was a level of support both on the Qs from pre-market. And again, usually when I'm looking at Qs, I can't ignore split candles, but we did get through our first line of support on the Qs, which was this pre-market low line, and we put it in a higher low. Okay, now during this trade, we were talking about moving your stops down. This is an aggressive entry because we're hoping it gets down to here, but if it doesn't, just put your stops at break even or somewhere in profit, because if you got in up here and you got out anywhere in this candle, you got out in profit. There's no harm in making a little less. There is a lot of harm in not protecting yourself from losing money in a trade that was once green. Okay, I'm a big advocate of putting your stops as soon as you can, immediately at break even, if you can get a couple of percent up on the trade in the first place. Okay, a lot of people are struggling to find consistency. A lot of people are aiming a little too high and not getting out of their winning trades because they're not green enough. That's fine to do as long as you protect yourself in the event that it doesn't get to the point that is green enough for you, and you can stop out with something rather than less than nothing. Okay? So we always talk about now, if you want to hold on to your trades, go for it. Just move your stops down. Trail your winners. Okay? Grow your account. Despite, you not willing to take profits prior to it being a gigantic number. We recognize this is a higher low. Good opportunity to get out here, whether it's in stops, because you made potentially 12% on your trade in a quick period of time. Whatever the reason was, it doesn't matter. SPY did make it right back down to a previous support level as well, which is another reason you could potentially take your profits. You guys, we got to look at both support and resistance on both sides, okay? Qs didn't make it to a level of support that we wanted it to, but SPY did, okay? And if you got in up here, it was a better trade than if you got in here. Still a clean move. You bought at resistance on both, okay? At the time, Qs looked like they wanted to put in a lower high, and you play it down to the next support level. Awesome, whatever the case. We pull up, put in a lower high, higher low, lower high. Now we are in a wedge. Got to wait for the wedge break. Now this is not the reason we took the puts here, hypothetically. It was because we were waiting for Qs, having already acknowledged that ADD was clearly selling off, so we already have the market in our favor. Now we're looking for a little bit more aggressive, and we just want Qs to break a support to give us a reason to jump into that trade. Now we also have our put line down here, which, why didn't you buy them here, Jimmy, when we breached these before? Because in both situations, Qs were on support levels. You cannot play the puts or the calls if Qs are at resistance when you're crossing the call line, or Qs are on support when you're crossing the put line. Don't do that. Okay, wait for all things to be clear. In this case, ADD was already dumping, and at 10:04, Qs finally was breaking below. What were we looking at? Oh, we were looking for a break of this support right here. Okay? We were looking for a break of this support, even if it made it down to here. Awesome, still would have worked. Or if it made it down to the next line, the orange line, awesomer. Or if you stayed in it and just trailed your stops, we made it all the way down to this target, where it stopped on a dime. Every single one of those lines that we hit on Qs are always potential exit areas, okay? And if you played the put scenario, you got paid. If you played it aggressively up here, you got paid. How much do you say? Well over 100%, okay? Now, I wasn't in this trade, even though I don't trade at all. I was done for the day, paper trading or hypothetical trades or whatever, after those first two. Good day for me, however you want to cut it. And then we found support here, bounced off. But nonetheless, guys, the reason we were entering this trade here, once again, was because Qs were putting in lower highs, lower lows, and we were breaking through support levels. Aggressive entries in a downtrending market, okay? Qs were also hitting support levels down here. And as we were moving and trending down here, I'm getting asked, Jimmy, when would you buy calls? When would you be interested in calls? And people don't like my answer when it comes to counter trend trading, because in order for me to be comfortable trading against what we were seeing in the market, ADD just, falling off a cliff, and Qs clearly trending down. A lot of people want to get into calls as soon as that trend's broken. That's not me. But if you're an aggressive trader, at least wait for the downtrend to break. At least wait till we get above a known level of resistance that was holding. Okay. And play to your, you got to look left and find where your resistance levels are. We knew the first one. I said, if we get above 438.61, our first resistance is going to be at 438.79. Not a very big move. If it gets above that, look to the next lower high to your left. Guys, it's just undeniable. Okay. You can't deny support and resistance. Learn how to use it to your benefit. What we don't know and we'll never know is which one of these resistances is going to hold, which one's going to fail. So if you're looking for a close above resistance and you know your next resistance is 10 cents away, it's not worth the trade. It's just not, because if the first resistance holds, you're not going to make any money. You're going to look at your P&L and say, well, I haven't made anything on this. And then you're going to feel inclined to hold it longer, even if it moves down. I don't like to play that game. Okay. I'd rather wait for a move that has room so that when we get to where I expect it to go, I could take my profits with a smile on my face. Okay. Now we got to bounced off of a couple of times. Your saving grace was turning resistance into support. Guys, if you're in calls here, make sure we hold above 438.61. If you want to hold, that's your stop loss. Let's see how high she can go. Not me though. Jimmy, where would you be interested in calls? I said at minimum, SPY needs to be above their downtrend line. Okay. And Qs need to be above 440.01, preferably above 440.34. Word for word, exactly what it said. Other than that, calls are not a thing for me, which takes away 50% of your choices, which leaves you with one thing to buy: puts. Now, that took away any reasoning to justify calls, right? So that's how you spot trades not worth taking. Now, why would I take them if we got above those lines? Potentially. Well, because we would have to squeeze out a bunch of sellers that kept us below that line. Give SPY a chance to build momentum. Buyers are getting stronger. Sellers are turning into buyers. And then I'd feel like, hey, there's a legitimate effort going on here. Let's play it. Everybody wants to look at the move immediately as it breaks the trend. That's fine. That's an aggressive entry. The market's still very heavy. I don't want to carry that weight. I'd rather wait to see if all of that weight turns into a benefiting factor, i.e. sellers turning to buyers, so that we can propel the move upwards to meet the next level of sellers, which would be up here at 441.15. Okay? I'm not looking to make every dime on every trade. I'm looking to find the best chances of winning any trade that I take, as long as it's some amount of win. For me, a minimum of a 20-cent move, because with the leverage that I play, hypothetically, a 20-cent move pays roughly 8 to 10% return on your money. So at minimum, I'm making 8 to 10% return on my contracts in a 20-cent move under normal circumstances. Okay, that's good enough for me, especially when it happens in a minute or two or three. I don't know what you guys expect to get out of the market on a daily basis, but there are people who invest for a year at a time, hoping to get an 8 or 10% return on their money. I'm trying to tell you how to do that. Yes, you're investing a lot less per chunk, but you're still getting 8 to 10% minimum on these trades. Minimum on these trades. And a lot of times, the potential for a lot more is there. We're playing market structure. We're playing price action. Not a million indicators, nothing else. And there's more and more people in here that are seeing how often this works. Okay? Every line on this chart here was drawn before 8:30 or at 8:30 in the morning. You can't tell me they don't get respected. So you just got to wait for them to no longer be respected and then know that it's more likely to run to another level of respect. Well, if we break through support here, we know the next one down is right here. Well, if that's a big enough move to justify a trade, well, then there's your entry point. It can also be your stop loss. If we close above that entry point, you get out. Okay? Every trade doesn't work every time, but the right trades work often and they pay well. Okay? So, after this, right around 12:15, 12:20, I went to lunch. And of course, SPY does things during lunch when I go to lunch every time. ADD was continuing to sell off, something fierce. And, well, I mean, if you just bought pullbacks on the Qs during a downtrend or waited for levels of support to be broken in a very downtrendy day, the odds of it making from one support line to the next were very high. Okay? This time it didn't work out. What was going on SPY around 12:41 and 12:42? I don't know. They were struggling right here around a support level. Now, SPY made it from one support to the next, was holding support down here, and may have kept you out of these trades, right? Likewise, we pulled back to resistance on Qs. You would have said, hey, that's higher lows, higher highs, probably not the right time to buy. Well, wait for a break of those higher lows. Okay? If we break higher lows and you know, hey, there's one here, there's one here, whatever the case is, just wait for the uptrend to be over. Okay? You could play conservative. You could wait for a break of this support down here, which brings you down to your next support. We got to close below this support, and guess where it went? Straight down to the next support. And we've closed below that support, right down to the next support, and so on and so forth, guys. There's when you add all of the things together, it increases your odds. Okay, it increases your odds. Now, I don't trade this late in the day, so none of this mattered to me. I don't trade at all, for that matter, so none of it matters. Period. But what does work is support and resistance, and when you add confluence to it, you can actually make a lot of money in the market, and you can better your odds of winning. It doesn't have to be gambling. It doesn't have to feel out of control. ADD went from positive 1,500 today to minus 2,000 at one point. Yeah, positive 1444, all the way down to as low as minus 2,200, almost 2,100. That's a massive sell-off. Massive sell-off. The whole market was selling off today. Don't play against that. All right. And we had a beautiful day in the community. As it stands right now, we had 34 reds and 241 greens. Now, this is people who are going in and casting their vote when they're done trading. After our first 3 trades this morning, which was ended by 10:11 this morning, so what are you, 40 minutes into the trading day, our win rate was 8-1, which is mostly what it is right now. So a lot of folks caught continuation of moves. A lot of people were holding their trades longer. A lot of people got in at right reasons. A lot of people traded later in the day and not in the middle or in the beginning. Whatever the case, it was a fantastic day to take trades. Just had to know when to get in, because you could have lost money on puts at times too. Pretty hard to do if you bought the right time. But nonetheless, great green day. Congratulations to all of our members who played puts and took advantage of some of these moves. With that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, well, we'd have a link down below. We'd love to have you. First week is completely free. As soon as you show up, you have access for free for 7 days. Unless you've been here before, then you already used your patronage. If you like what you get for those 7 days, consider becoming a paying member. We'd love to have you. It's a pretty good community. And that's pretty much it. So tomorrow is a charting session, a live charting session for all of my paying members. I'll see you there. And I hope you all crushed it today. Till then, I love you guys.